Darren, could I mute you for the time being?
Yeah, sure thing.
All right, thank you. A very good morning, everyone. Thank you so much for taking the time out today to join our discussion with Kun Darren and Kun Rajesh. My name is Gunjan Saha, and I lead marketing initiatives here at Vimo. Now, before we begin, I hope everyone is able to see me clearly and hear the audio clearly. If during the session at any point in time you have any issues, please let us know via the chat option and we'll have that rectified. To tell you a bit about Vimo, Vimo is a distribution excellence cloud for financial services, sales, and distribution. We work closely with over 60 plus leading banks, insurance companies, and financial institutions globally to strengthen their sales and distribution processes. In today's session, we'll be trying to understand how market leaders like AIA is building the future of insurance distribution in Thailand. Thailand's bancassurance distribution model still relies heavily on legacy systems, fragmented processes, and manually coordinating leads and customer engagement. The teams need a simple, automated, and end-to-end processes that reduce barriers to sales and relationship managers. Some of the few areas that we'll be covering today include levers for growth and expansions within bancassurance, tools and playbooks sales leaders can use to stay ahead in a competitive market, retaining the strength and frequency of partner interactions as we move towards a digital world. So without much ado, I'll quickly introduce our speakers for today. We have with us Kun Darren Thomson, who is currently the Senior Advisor at AIA Thailand. Prior to his new role, he held the position of Chief Strategic Bancassurance Alliance Officer in Thailand for AIA Thailand. With countless years of experience in the financial services industry, he has worked closely with the senior management of Thailand's top banks in formulating and executing the short to long-term strategic plans, advancing bancassurance practices in the region. Kun Darren was formerly a Director of Partnerships Development in the Strategy and Corporate Development Department of AIA Group Office, and before that, CEO Group Partnership Distribution, AIA Group Office. He has been a lifelong Tottenham Hotspur fan and enjoys racing and restoring modern classic cars. Kun Darren, it's a pleasure to have you with us today.
Thank you very much for inviting me to join. Feel very honored.
It's a pleasure. Along with Kun Darren, we have Kun Rajesh Sablok, who is the Chief Customer Officer here at Vimo. Rajesh brings 20 plus years of experience having worked closely with leading banks and insurance companies, helping them unlock the value of contextual intelligence for the sales and distribution. Prior to joining Vimo, Rajesh served as the APAC Head of Strategy and Innovation for Willis Towers Watson, a global multinational risk management, insurance brokerage, and advisory company, where for over 12 years, he assisted leading financial services organizations on market entry, business and product strategy, distribution strategy, M&As, bancassurance optimizations, and other bespoke consulting requirements. Rajesh, thank you so much for agreeing to have this discussion with Rajesh.
Thanks, Gunjan. It's always a pleasure to have a fireside chat with Kun Darren.
Right. All right, so I'll hand over the stage to you, Rajesh. I'm looking forward to exciting discussion.
Thanks, Gunjan. Good morning, Darren. Pleasure to have you on the webinar today.
Thanks, Rajesh. Good to see you.
Yeah. So just as we, to kick off the conversations, Darren, I was wondering that the audience, some of them may or may not be aware of, the difference in the model, the bancassurance model that operates in Thailand vis-a-vis what we can see in, other markets in the region that you've been, and also in Europe and other places as well. So if you could very, succinctly talk to us about, what is the model in Thailand, and how do you think it is different from what, people may be aware of in other markets?
Okay, yeah, thanks for the first question. Perhaps if I just go back in time quickly and just really talk about where bancassurance started and why the developments in Europe, probably 25 years ago, but that was really the advent of bancassurance, how that affected Asia and where we are today, particularly in Thailand, which I think is the subject of today's discussion. When banks realised in Europe with diminishing interest rates that they needed to leverage their customer base to sell additional financial services products, particularly insurance, they didn't have the skill sets, they didn't have the capabilities, and therefore the partnerships that evolved were, a bank and an insurer coming together and formulating these partnerships, and that happened across Europe as well as the UK. And what we saw was the specialisation of the insurer being placed into the bank branches using their premises to engage with the customers, and then the banks obviously enjoying the fee income that came from that. Around the turn of this century, around 1999, 2000, companies like Prudential, Aviva, some of the European insurers that had started to get a significant footprint in Asia brought those models to Asia, and that was really how they started to develop. And I think the success of partnerships like AXA Mandiri, like Pru and SEB in Hong Kong, even New York Life and Siam Commercial Bank here in Thailand were formed off of that particular model of having insurance specialists of the insurer giving face-to-face advice in the bank branches. Winding the clock forward, a number of years ago, the Thailand regulator decided that wasn't the most appropriate model for this particular market. There were a number of reasons for that, and they changed the TOM. And what we have now is bank staff only being able to sell insurance products alongside the other products that they sell. That has obvious issues, and the insurer can only play a part in wholesaling or supporting the business development activities of those bank staff as they engage with their customers. So the model here, very different to other markets where you can still have insurance specialists, particularly places like the Philippines, Indonesia, these big markets, Southeast Asian markets. Hong Kong and Singapore are moving away from those insurance specialists more to the Thailand model. But if you can grandfather those existing relationships, I think the regulator tends to turn a little bit of a blind eye to that. But I think going forward, I can't see too many changes here, and I think we have to play with the model that we have.
Yeah, I think thanks, Darren. I think you painted a picture of where it started and how it's ended up. And as you mentioned, many countries are approaching this model where they feel that the bank as the intermediary should own the entire sales process like any other intermediary would. And the insurance companies as product manufacturers would need to support them with respect to providing them the product and every other aids and training, etc., to support them.
Right.
And like you mentioned, in certain markets like South Korea, I know that regulations obviously talk about any given insurance company cannot have more than, let's say, 25%, if I'm not wrong, of the business that the bank will give. So which means that at a minimum, the bank will need to tie up with 4 or 5 insurance companies. Now, if that were the case, having 5 company representatives sitting in a bank branch would actually make it even more difficult. So that's why I think the movement is towards having bank own the sales process as well. So in that context, Darren, like you mentioned with Thailand as well, that is the model that the TOM has now been changed to, and your team and your employees servicing the banks are playing the part of a wholesaler. So now the levers that you would have otherwise managed if it were an insurance specialist from the insurance company sitting in the bank and selling, versus now that the sales is going to be dependent on the bank representative selling the product. How would you then manage your levers with your team, and what has become more critical in your perspective then?
Another good question. I think what we have in front of us as distributors, if you like, and if you think of it in terms of the medical profession, where you have generalists, general practitioners, you have specialists. What we have are general practitioners, people that can only address customer needs at a certain level. And typically in the bank, it's a very transactional environment where targets are set and people are expected to meet those targets come what may. The time that you have with the customer, particularly in the bank branch, and here in Thailand, up until quite recently, business was only allowed to be transacted in the bank branch. We weren't, the bankers were not allowed to go outside of the branch and meet their customers at their place of work or at their home, where they would have perhaps more time to engage with the customer. So a lot of these sales activities were conducted when somebody was in the bank, perhaps doing some administration, some depositing, or even taking out a loan, etc. So you have to work within that environment sometimes, which also gives a lot of or presents itself with issues and opportunities, I guess. So we have to adapt our support model to suit the generalist side of things. But what we try to do within the partnership that we have here with Bangkok Bank, and I think a number of others are starting to look at that as they move forward, is how you put in place some specialism, how you get the bank to ring fence certain people, certain individuals who have a propensity to want to advise on long-term needs of customers, i.e. bancassurance rather than the short-term banking transactional type products. So finding these people with that sort of appetite, that sort of passion, that sort of skill set, where you can start to develop this specialist model alongside the generalist model. Generalists, providing leads to the specialists for more difficult sales, more intricate, more big ticket sales, but also being transactional in terms of meeting perhaps just the health needs, critical illness needs of people, which is relatively easy to explain in a short amount of time.
Definitely. So as you mentioned clearly, the engagement now with the bank sellers, who are now the key person dealing with the customer, and he's the one transacting the sales and ensuring that they are now brought up to speed, both in terms of competence and understanding of the insurance product and the business model itself, because a banking product is very different from an insurance product, and hence the sales process is slightly different, and the way you talk to your customers will be slightly different. And it is not transactional, like you mentioned. So insurance may be a long-term play and a relationship to be built with the customer as well. So I believe that engagement, face-to-face engagement with customers for the bank staff as well as for your staff who's supporting the bank staff in having those conversations. How do you think then COVID had an impact on that? And especially when the country went into lockdown and people would not go to their offices, or even the customers not walk into bank branches. Did this have a major impact on the business per se at your end?
Yeah, for sure. I mean, the way that you described it is very accurate, and where you have less traffic going into the branches, which is part of what's happening anyway, not just in Thailand, across the world, where people are embracing more the digital side of doing their banking. We were seeing less traffic being multiplied because of COVID. We work with the regulator here, with the OIC, to try and come up with a remote way of selling using digital platforms like Line, like MS Teams, etc., where you could, effectively, as we are with the webinar, talking to a customer, doing the sales process, trying to identify needs, and then doing the fulfillment online as well. Now, that took a number of months to develop. As you can imagine, you're relatively starting from scratch. COVID wasn't something that was sort of telegraphed months or years in advance. It just happened, as we all know, and we had to react very quickly. By the time we had that in place, here in Thailand, COVID had sort of died away to some extent. We were only getting 5 or 6 cases a day, and the people started to come back to the branches, and things were sort of getting back to some sense of normality in the banking environment. So it was kind of parked on the shelf as, we can always resurrect this if we need to. And we're going through a sort of second wave at the moment. Having said that, I think there's still a reluctance, particularly in the banking environment, to embrace this technology. I think, again, in this particular jurisdiction, in this particular country, a lot of the bancassurance sales are done on a face-to-face personal relationship side of things. So I think what we need to do, and what we are developing, not just here in AIA, but also across the industry, are digital products that can be sent to the customer through their iBanking platform, that sort of thing, where they can make a choice, and that is either to transact and to take fulfillment from a digital mechanism, or to ask for somebody to come and talk to them, perhaps, in the branch when they're visiting or at their home. And the regulation there has been relaxed to some extent. So the bankers can now go outside within certain limitations to visit customers. So I think digital will be an enabler to still transact business, but I don't think it will take over right now, particularly on the more complicated, more sophisticated, bigger ticket item products. I think on the more transactional side, again, you can certainly digitalize it reasonably effectively.
Actually, very good point, Darren, that insurance is a product where, and like you mentioned, the complicated products require some bit of advice and ensure that, there are multiple engagements with the customer happening. But digital can definitely play the enabler layer to ensure that the activities that need to happen and the engagement that need to happen is happening and is being monitored, proactively being addressed. So I know that AIA, not just in Thailand but overall in the region, is looking at digital as a very strong focus area for the company, and has been at the forefront of adopting technology. Although it can't be said for many insurance companies, because while banks have been ahead of the curve when it comes to adoption of digital technology, insurance, especially life insurance, is seen as a laggard. But because of this COVID and the situation, do you see that changing across the industry? I know for AIA, sure, they're already doing well in that context, but overall in the industry, do you think that's picking up as well?
Yeah, I think so, and some banks and some insurers are further ahead than others. I think with international insurers like ourselves, there's obviously a big push, and we have a new group CEO, which you're probably aware of, who came from Ping An, and that was very much at the forefront of digital enterprise. And a lot of things that we're doing now, particularly in our future strategy, will revolve around technology, digital, and analytics. And I think those are very, very key aspects. The bank, in the way that it performs its businesses, has a lot of customer information, a lot of analytical information. I think where the insurers can help is particularly on the propensity modeling side of things, to help deliver, the right sort of product to the right customer through the right form of distribution. And I think all these things will come to bear. But there are certain banks that, like a DBS in Singapore, who sort of puts itself out there as a digital bank and wins a number of awards for doing that. Whereas, there's probably more traditional banks, local banks, that haven't even embraced some of this technology as yet, because they're still very much aligned to their previous generational models, and there's maybe a lack of investment or a lack of expertise to get things moving. But everybody will have to catch up at some point in time, otherwise they'll be left behind. The world is changing, as we know. Things that we're doing now we weren't doing a few years ago, and even people talk about things like iPhones being only 10 or 12 years old, and that's our life now, and a lot of our business is done off the back of that. So it's gathering momentum, and we'll continue to do so.
Yeah, definitely. Yeah, you're right. I mean, I think most of this is also getting pushed because of the customer's own behavior, which is changing, and their approach to how they want to be dealt with and how they want to be approached, and also regulation. So two major factors I see in changes to the way businesses, industries operate, and I think the wave in that direction is pretty obvious, like you mentioned, Darren. So from your point of view, Darren, with respect to how would you enable and equip your teams, and like you've done already for Bangkok Bank, and do you see that as really proving to be useful, because it's giving you the necessary intel, the visibility of the activities that are happening on the ground, and the information which you can use to help drive the bank to generate more income for themselves, because you're getting some intelligence around how things are happening today on the ground. And that's something that you adopted already, but I'm just checking, how is that coming along?
Yes, so I think it's a good point to make, because I think for many years we've looked at the distributor in terms of the sales funnel. So at the start of a week, how many prospects have they got to contact? How many appointments do they have in their diary? And as the week unfolds, or as the month unfolds, how many of those prospects actually turned into appointments, how many of those appointments turned into a face-to-face activity, and how many sales were made, and what are the ratios? And a lot of work goes into that to try and improve the the number of prospects, improve the conversion rates, etc., etc. And then I started to look at my people and where they play a part. So within the bank relationship that we have, we trained about 4,000 people in about 1,000 branches, so ratio about 4 to 1. And then we had our wholesalers who were looking after, on average, 3 branches. So it's around about 12 to 15 people per branch. And we didn't really have any particular lens on what their activities were on a day-to-day basis. How much time they spent traveling from branch to branch, how much time they spent in one branch compared to another. When they were in the branch, what was the level of engagement with certain people in the branch? Did they meet with the branch manager once a week or twice a week? Did they have a business review with the branch manager? What was the discussion? What was the agenda? How many of the branch sellers did they meet? Did they meet non-sellers so that they were encouraged to provide leads? All of these things, what were the training events they put on? What was the one-to-one coaching? What was the case analysis? What were the skill drills? All these things. So we'd, provided our people with job descriptions. We provided them with the terms of reference in relation to what we expected them to do on a day-to-day, week-to-week basis, a day in the life of, but we had really no way of understanding what level of fulfillment they actually gave to what we wanted them to do. And also, on the other side, on the flip side, we weren't giving our people a platform on a quarterly, half-yearly, yearly basis at their appraisal interviews to say, here's what I do. The reason my branches are successful is because I spend this much time here and I spend this much time there. And when I'm there, these are the things that I do that have the right effect. And that would then put us in a position where we might have to promote that person or give them a significant pay rise or protect them in terms of not wanting them to leave our business. So it's not just about policing or supervising, it's also giving people an objective platform in which they can actually promote themselves and showcase the things that they're positively doing themselves. So you need that sort of mindset as well. And also, I'd be naive or I'd be crazy if I suggested that banks and insurers on a day-to-day basis have these perfect relationships where nobody complains about each other. The insurers constantly complaining that the bank staff are not committed to bancassurance, they're not focused on enough during the day, and vice versa, that the bankers will use the excuse from time to time that the wholesalers are not supporting the branches in the right way, not giving these supports that I mentioned before. So this again can be used when you aggregate all the data that you can bring together off the PRM platform that we put in place with your guys' help. We can then use that with the bank to say, okay, if you get more of your people doing this with assistance from our people doing this, these are the sort of positive effects you can get, and that means generally more business and more revenue, etc., etc. Sorry, a little bit of a long-winded response, but I've always been excited about putting this thing in place. It was 2 to 3 years in actually happening, and we're starting to see some positive results already from it. So it's good.
Thanks, Darren. I think it was it actually articulated quite a bit in terms of what is the value that such a system can create, not just for the people who are using it, but also for your partners as well. So it's actually a win-win for everybody. So like you mentioned, it's never meant to be policing. It's meant to be providing a platform where people can actually demonstrate what they're doing and also ask for any help that's needed. In fact, in some cases, like in our case as well, the solution that you deployed, there is a possibility of over time when the data flows in, the system themselves, have nudging and providing notifications to managers about areas of improvement that the system observed over time, so that collectively we can ensure that the overall objectives are met for both of them. If they improve, they earn more, and also they become better at what they're doing. So eventually that is beneficial for them as well. And as you said, it's good to hear that it's having some initial impact and something that is going to be beneficial for everybody in the long run. So that's good to hear. So in terms of just coming back to our COVID days and discussions, so Darren, do you see the priorities have changed for insurance companies and banks, given what has happened, and given the drive towards technology? Do you see more banks now also looking at, and more insurance companies looking at equipping their teams and enabling them with digital tools that will make their help them, address the situation if something like this were to happen again in the future?
Yeah, I think the digital tools need to be aligned to the operating model, and we've talked about PRM and how that's sort of catch-all in terms of managing activities and managing and providing support to people to develop their business even further. We always talk about franchise, right? So when I talk to my wholesalers and my wholesaler managers, what I'm asking them to do is think about how technology can help them through all aspects of the sales process or all aspects of the operating model. So what we firstly need to do is, if somebody has, if a BDE has 3 branches, as I said before, and on average there's 15,000 customers in each of those branches, in aggregate you've got 45,000. The actual number of sales that need to come from those 45,000 customers on a yearly basis is not that great. It's probably 200, 250 sales. So where do we get those 250 sales from? Who out of those 45,000 customers are the most likely to buy? So we need to get really good at providing them with the right level of leads, quality of leads, propensity-based leads, so that once they do get their bankers to engage with those customers, the likelihood of them wanting to listen to them in the first place, engage with them, and then take out some form of long-term protection or long-term savings is going to be the right sort of product match for them. So that's kind of very important to begin with. We then need the sales activity management systems in place so people can manage those activities and understand where the success and where the failures come from. We need to provide the management with that oversight so they can aggregate and look at where to provide the best support and where they can provide more direct coaching if need be. And then, one thing that I think we miss a trick on in the bank environment, and again, this is possibly because of the limitations of time, is shortfall planners. So, I say to some of my people, if a customer comes into a branch and the banker advises them that they need to plan for their retirement, and the customer says, okay, I understand that. What's my number? What sort of fund do I need for how many years? I think there's a blank expression on the banker's face in terms of, I've got no idea. What can you afford? It just links back to, okay, you want to buy a product. This is a good product. What can you afford? Okay, let's get it in place. Yeah. So I think it's critical that we have not particularly complicated, but 5 or 6 key questions, and it gives somebody an idea of what retirement fund they need, which would give them this amount of income for the next amount of years, or 5 questions that would show them whether an international school or an overseas university is better for their kids than a local, and how much funds they would need for a sort of 4-year degree program. Or, if I want to protect my wealth or my health, what is the amount of life insurance or critical illness protection I need? So we need to provide these sort of things to the frontliners. Otherwise, they're guessing, or they're just falling back to, again, that sort of transactional type sale, which is never the best place to be. So again, it's looking at where digital technology, analytics can help at every stage of the process to make life easier and to make life more presentable, I guess.
Yeah. And this definitely addresses my next question, because I was wanting to check with you, how you think technology will play a part. And as I understand, you mentioned that across the value chain, across the operating model, at various stages, technology has a role to play, and it's playing that role. Whether it surfaces intelligence, it provides insights, actionable insights for managers like yourselves and others to take data-driven decisions, which are really going to have impact. I know that managers over time develop their gut as well, in terms of the gut. That sometimes plays a lot of part, but having now data back that is going to be significant and beneficial for the business overall. So on Thailand bancassurance itself, Darren, as you brought out, where we started with bancassurance overall and how Thailand bancassurance is, and given the topic of our conversation today is around the future of bancassurance in Thailand, if you had to crystal gaze into the future and think about, how do you see the bancassurance in Thailand evolving, and what could be the key drivers for that in your point of view?
Okay, so again, if we look historically over the last sort of 15 years, I suppose, of bancassurance in Thailand, since the days of New York Life and SCB, one of the pioneers, and then obviously that evolved over the years. A lot of it was driven by the banks being very competitive and driving top line market share. And the easiest way to do that in a country like Thailand, where deposits are king, and people are quite reluctant to go into the equity markets or have been for a long period of time, is to move product into what we call deposit substitute, endowment, short-term endowment type products. And that's been very easy to do, provides the bank with a level of fee income, provides the customers with, perhaps a better interest rate over a period of time, and provides those market share statistics to show how good you are at doing this kind of thing. And what we've seen recently, obviously, is interest rates coming down to a point where, a few years ago, you're getting 4 or 5% on deposit in Thailand, you're getting 25 bips, 30 bips now, similar to Singapore or Hong Kong or places like that. So those sort of returns are not really there, and it's very difficult for companies to manufacture those products. So we've reached that pivotal nascent time where things have got to change. And I'd like to think that, we anticipated that a few years ago in the way that we interacted with BBL and the way that we put in place certain aspects of our business. And I think others are now really understanding that. The other thing is you've also got the insurer and the bank are not part of the same group. So, they're two different companies that have different ways of looking at things. So an international insurer like AIA might look at things differently to FWD, for instance, that works with SCB now. But in common terms, we're all facing similar issues, and we all need to adjust and shape our business going forward. So what we will see, I think, is more protection products, standalone critical illness, more health products, because obviously customers are now more aware of what can happen if you have a pandemic, or what can happen if they don't, look after themselves, address their sort of eating habits and their other social habits. And also, as those interest rates have come down, you have to move more towards unit linked, and this has been a slow burn in this country for a lot of years. In the past, I've seen places like Malaysia go from traditional, 90% traditional to 90% unit linked over the space of a couple of years, similarly in the Philippines and Indonesia. I think you're now going to see that, everything has to come together at the right time, and I think unit linked will have its day going into 2021 and 2022, and it may not come back to traditional in the future. Traditional might become the niche, and unit linked more the vogue product. I think the other thing that needs to change is the high net worth aspect of the business. It's very easy for the high net worth and ultra high net worth in places like Thailand to travel to Singapore and Hong Kong for business, but they're suffering now in terms of the products that they can deliver. So I think we have to look locally at how we can help with wealth transfer, inheritance tax planning, and some of the products here can still provide that sort of ability to satisfy that need as well.
Yeah. It definitely appears that the bancassurance growth story is pretty rosy as what can happen and what can be delivered in the market. And also, Darren, as you know, in terms of Asia, many Asian countries, including India for that matter, the rise of bancassurance in the recent years has been phenomenal. And in spite of that, you mentioned about AXA Mandiri, I was doing some research while I was still at Willis, and I realized that after 10-12 years of being in business, still the penetration of insurance across their customer base was in early double digits, so to speak. So they had so much more, almost 90% or 85% of their customer base which did not have insurance. So you can imagine the captive opportunity itself within the bank, which has not yet been exploited, in spite of them being at the top of the game, and they're amongst the top 2 or 3 players in the market as well. Similarly in India, and many banks, as you've seen as well, have made joint ventures. Like you mentioned, they're not part of, they're 2 different entities, but some of them have come together, created joint ventures as well. So Europe, where, as you mentioned earlier, France, where bancassurance started, almost 80%, 90% of the business is coming from bancassurance overall. And we see Asia is inching towards that. I mean, if I look at India, for example, I was just yesterday looking at this, amongst the private players, more than half of the business now is coming from bancassurance. And it started off where bancassurance just started in 2002 or 3 when Aviva set up shop in India. before that, Bancassurance was not, and SBI Life and HDFC and all those companies were created. That's when this got started as well. So clearly there is lots of opportunities there, and given and technology, like you mentioned, has definitely a role to play in ensuring that happens. And I think people are also coming up to speed with the use of technology. Even the managers, like you were mentioning, are now gearing up to, instead of having their phone calls and relying on conversation on WhatsApp, etc., on what's happening on the ground, they're now using data-driven approaches to have these conversations which are more meaningful and are able to enable them to guide and coach their teams appropriately. At this point, I wanted to just check if there have been any questions that have come on the platform where we are like YouTube, I guess. Kunjan, do you have any questions?
Yeah, so we have two questions from YouTube. So the first one is, apart from the net sales generated by a bank branch, is there any other success metric that the insurance aggregators track for overall success of the relationship with the branch? Darren, would you like to take this up?
Yeah, so I'm not sure that we're at that sort of more sophisticated level yet, but I think there's a couple of things that we're trying to get the bank to think about. One is, I think you were just alluding to this now, which is the amount of penetration into the customer base. But what we must realise, this is a very delicate subject. Well, not delicate, but it's a bit intricate, because what we tend to measure is the amount of product that is sold by the captive insurer into that customer base, which might only be 1 or 2%. However, the customer base is being sold to on a day-to-day basis by competitors, other insurers, etc. You know, there could be hundreds of thousands of policies sold to a bank by the competitors, but by agents and that sort of thing. So the actual penetration of the banks is very similar for their customer base across the market. It's just how many you can physically sell. And what we've got to try and get the bank to realise is, if they're selling 100,000 policies a year, but there's 900,000 policies being sold to their customer base, what can we do to get those other 800,000 people to take the bank as the first port of call, rather than doing it with their current agent or their other bank or whoever, or their IFA or whoever they're going to? So that's something I think we need to look at. The other thing is, if you think about the things that upset the bank's deposit base, which is, you know, where do you see the outflows? A lot of those are because of high medical bills, and some of those are because of death duties, funeral bills, this sort of thing, right? So why don't banks think about having insurance as part of their assets and have it as a deposit substitute? But not a deposit substitute, but a deposit protection product. Yeah. So that rather than the money's coming out of the deposits to pay for these things, the insurance pays for it, and therefore it maintains their deposits. And then you add it to their aggregated statement. So for the sum assured, it actually gets put into the aggregated statement, and therefore you have that showing as an asset, rather than what a lot of people think of this as a liability, because you have to pay premiums on it. Those premiums are actually providing an asset to somebody else or to your next of kin. So maybe to show it that way. So there are some things that I've suggested to the bank they think about in terms of how they look at insurance, not just on a net fee income spread basis, but also using it for other ways to drive activity, I guess.
Right. So I guess a great segue for the second question that we have received on YouTube. So Rajesh, this one's for you. What are the top 3 key activities that you think insurance specialists or BDEs, BDMs, managers could do to improve their productivity in this, particularly given that we are in a pandemic situation, right? Where it's more of virtual relationships and stuff.
Yeah. I think we did discuss this, but let me expand on this as well. So basically, like we were saying, right, for a sale to happen, at least in the context of Thailand market today, the sale is being done by the bank staff, and the insurance company staff is playing the wholesaler's role. So for that, for the insurance company staff, then it becomes essential that the engagement that they were having with the bank staff who were the sellers continues to happen even in the COVID scenario. And like Darren mentioned, that this is being enabled through virtual Microsoft Teams and other tools that are available to do this. So they need to obviously continue maintaining conversation with the bank sellers, and now it's not going to be face to face physical, but it's going to be face-to-face virtual. So that continues. And in the situation like this, where COVID is also, a couple of things are also happening because of this, right? There is some bit of feeling amongst the customer base that insurance is now critical. So they need to have insurance. People who were fence sitters, not deciding on whether they need to buy insurance or not, are supposedly leaning towards buying insurance. So do we have, instead of, from a company's perspective, a campaign that's created which is towards targeting those people, using this situation to guide people to having solutions and products that they can sell to the COVID customers base? So that is something which the company is obviously going to do. So the activities that they're doing eventually is not going to be face to face, but moves to virtual, and that should continue. I mean, that's what I think the tools will enable.
Great. Darren, would you like to add on anything to that?
No, I think that was very well handled. I think they did a good job in explaining that one.
All right, great. Folks who are watching us live on YouTube, please use the chat option on the right-hand side to send in your questions. We'll be taking them up live again in some time. Rajesh, Dan, I'll let you continue the conversation.
Yeah, thanks. I guess we just have about 5 minutes anyway, right? So let's. I was just wanting to check from Darren that he has tremendous experience for running partnership distribution. Bancassurance has seen bancassurance evolve in many markets. So from people who are our listeners, Darren, who are currently today, let's say maybe starting their careers in bancassurance or at certain level in the middle management or senior management, what would be your advice to them in terms of how they can help in terms of grow their own career, as well as in terms of growing the bancassurance business itself in whichever market they are in, especially in Thailand, for instance?
Wow, interesting. I think I've got to be careful how I position this, because it can come across in the wrong way sometimes. So something that I've always been, not always, something I've been constantly had thrown at me in the past is that I suffer from Stockholm syndrome. I'm not sure whether you understand what Stockholm syndrome is. It's this situation where somebody gets kidnapped, and over a period of time they sympathise with their kidnappers, and when they suddenly are released or they are found by the authorities and they are asked to be separated from their kidnappers, they want to stay with the kidnappers. They form this relationship, if you like. And I always think that when you're running distribution with a bank or a partnership, you are the voice of the bank when it comes to being in your company, in your insurance company. And the only way that you can do that is you've got to have heart and soul and passion in that partnership. You can't just do it to maintain the relationship. You can't just do it for a short period of time. You've got to put yourself into the shoes of the bank and really understand where they fit in the overall partnership and what they can and can't do and how you can help and support that. And when it comes to this sort of Stockholm syndrome, sometimes when you articulate what the bank's needs are or what the bank is saying, it can sometimes look like you're on the side of the bank, where what you're actually doing is just trying to be their voice.
Yeah. in
the situation where you're trying to get things done within your company to help and support the bank. And sometimes, it can come across as sympathizing with them. It can come across as being finding excuses for them for not to do things. But invariably, their concerns are justified. And I think what they're doing is they're reaching out for support and guidance and help. And we shouldn't expect them to be able to change their ways immediately. These things can take, a lot of time to get done. So I think the first thing is when I talk to my people about coming over, I want them to think about their relationship with the bank and their job with the bank and their future success to be about how they embrace the development of the partnership on a long-term basis rather than just short-term tactical stuff, which anybody can do with the right tools, some incentive monies or some immediate training, but longer-term aspects of the business. What you're doing to invariably, over the medium to long term, affect positively the bank's customers, so they have more protection, they have more ability to provide their next of kin with income or salary if anything should happen to them. I think alongside that, you've also got to believe that the products you're providing are the right products for their customers as well. And you shouldn't just take products that are already on the shelf. Yeah. You should try to find ways to make them different. You should try to find ways to make them more exciting, but also to fit with the distribution that you have within the bank, which is different to an agency distributor or distribution, if you like. And then I think the other thing is really just trying to get your people to be the best they can be and to get the bankers to be the best they can be. And I think also just one last point is this is a people business. And when I bring, when we set up this partnership, the two things that I asked all my wholesalers and my managers to do in the first year was to build a team with the right quality people and to build relationships with the bankers. Those are the two things. If you can do that, build those relationships, build the trust. Trust is really important in this because, as I said before, the banker insurer, two different companies with two different philosophies, different value systems. You've got to find that middle ground. And the middle ground has to be built on trust and respect and that sort of thing. And if you haven't got that, these partnerships dissolve and they never become what you really wanted them to from the outset. And again, sorry, I'm just dwelling here, and please cut me off if I'm going on too long. But one of the things that you'll hear a lot is these partnerships come together by people on the bank side and people on the insurance side with that passion and that vision. But as the years go by, those bankers go elsewhere, those insurers go elsewhere, and people then pick up this partnership or this relationship, and they might have different views and different opinions. Why did we pay this much? These products are no good. Like the bankers aren't skilled enough, and you then get these things that get in the way. So you've really got to make sure that every time you hand over to the right person with the right mindset, and you take time to explain the history of where the partnerships come from, so they understand that and don't just focus on the future, but they understand some of the historic past as well.
I think excellent pearls of wisdom, Darren, for anybody who's listening to this. I think it felt like a senior strategic coach and advisor is guiding us on this, and I completely it completely resonates with me. I've seen this happen, like the points that you're mentioning as well. I've also seen this where certain successful partnerships are successful because of the various reasons you mentioned, where they're tightly interwoven in terms of the vision is collective, both the bank and the insurance company, right from the senior management which sets the vision down to the practitioners who are delivering on the vision are aligned and working very closely together. There's a tight governance around this entire model that has been present, and the more integrated they are, the better the relationship has been and been successful. And the points you made about not to pick, I remember initially when Bancassurance started, the products were not very different from what you would find on us being sold by an agent versus what's being sold to a bank, while the customer segments were very different. So now I think at least there's been some evolution here where companies are looking at building products for the bank segments, and within the bank itself there are multiple segments, so they're actually going that direction and saying let's make it bespoke for the requirements of the bank customer, so that there is a value that the segment achieves from selling those, right? So, and as you mentioned, as Bancassurance salespeople, we are supposed to be the voice of our customer. Having those conversations, understanding that is really going to help us provide that service to them and ensure that the relationship is successful over the long term. And we also discussed previously about how technology today is going to be an enabler in making this happen and ensuring that we're getting insights which can be leveraged. So I felt it is excellent conversation, Darren, with you. I just want to check if there are any last questions, because I think we have potentially run out of our time. But Gunjan, is there any other questions you have now from the audience?
Yeah. There's another question. While you were talking more about how we can digitally enable our sales reps and relationship managers, we have a very interesting question from that front, which is how do you get customers to be more proactive to use these digital systems and platforms which you're putting in place for them? As compared to the more traditional way of bank staffs approaching the customers when they come to the bank.
Is that for Rajesh or for me?
Oh, I would love to get both your thoughts on this.
It's interesting. I mean, let me start and then maybe Darren, you can pitch in
Sure.
as well. So with respect to the customer behavior and making them, adapt to technology, I think banks at their end have done this. If you look at, the banks have apps, they've opened up mobile banking, internet banking, and other kiosks as well. So they have embraced technology and they've got their RMs who are dealing with customers and enabling them to use this technology as well. And what insurance companies tend to do also is ride on that wave, right? Ride on that technology because that platform has been created with respect to customer engagement I'm talking about, and then use that platform to also surface the insurance companies' products for these customers. Now, having said that, every bank, and this also depends on the bank, because certain banks, depending on the customer segments, they may have a base of customers who are potentially the senior generation, right? And they may not have a doctor. They would have actually they like to go to the bank and talk to the branch manager. It's something that they do. And again, smaller towns, this is happening in those towns more so than in major cities because people don't have the time to go to the bank branches anymore. The footfall in the bank branches is declining, and they're using technology to ensure their banking transactions can happen. But so you will find both types of customer segments in a bank, and accordingly you deal with them. So certain customers will need that face-to-face conversation. They like it for various reasons, and that'll keep happening. But certain customers really love this do it yourself technology, self-serve kind of a model where they can do everything by themselves, and that technology the banks have provided. So I believe that's so. Darren, anything to add on that? What do you think?
Yeah, so I've seen digital in its basic form as just an evolution of direct marketing, telemarketing. Yeah, so DMTM, you got the customer list, you're phoning these customers up on the phone, you're trying to engage them to try and sell. Digital takes the TSR out of the equation. You're sending the information through their iBanking platform. They can go into that, and then they can obviously explore certain products and certain offerings, etc. And to be honest with you, I think it's a very small percentage of the population currently that would want to do that, would actually physically say today, you know what, I think I want to buy some critical illness, and they'll actually investigate and try to fulfill that through the iBanking platform. What I have seen is a company in Singapore, and I think they're very exciting. I won't say who the company is. I'm not an employee of theirs. I've had a look at some of their work, and I think BIMO have also looked at this as well. Is the way in which gamification can play a part.
Yeah.
And this is where, rather than sending customers information on product, you're sending them a quiz. People like quizzes. And at the end of the quiz, there's a prize, which might just be a Starbucks voucher, or it could be something, very, very simple. But the information you can collect is very valuable. So it might say, we're running a survey today on retirement. Have you got a retirement plan in place? Do you know what the features of your retirement plan are? Do you know how much money you would need in retirement if you live for 30 years as a percentage of your current salary? And you ask them 5 or 6 questions, they submit, they get like a gold coin flashes on the screen and says, yeah, you've won a Starbucks, well done. They've now got that information. They can then start to tailor the right offerings to those customers. And they're making it kind of fun. And I quite like the way that these companies are doing this. They're taking it to the next level already, and making it very interactive and participative, and getting people to think as they're answering these questions, and then perhaps saying, oh, I hope they'll send me some information on this. And funny enough, a day later they get it. Or maybe there's something at the end of the quiz that says, if you'd like some more information, tick this box and we'll send it to you anyway, or get somebody to call you. So I think that's the way that I'd like to see digital be an enabler. It's making it more interactive, more engaging, more fun than just a simple product offering, which is basically what we had before with TSRs on a call, if you like.
Yeah.
Thank you so much, Rajesh, Darren, for the great insight that you have shared. I guess we are at a mark now to bring this conversation to an end. Rajesh, anything you would like to add on?
No, I would just take this opportunity to thank Darren again for a wonderful conversation and great insights, Darren, on bancassurance and potentially how bancassurance would evolve in Thailand. Thank you for that.
My pleasure. Thanks for the kind invitation. I haven't done one of these for a while, so it was good to brush off the cobwebs and get involved. So thanks very much for the invitation. Appreciate it.
Right. Thanks, Darren. Thank you, Rajesh, for taking the time out once again. For folks who have been seeing us live on YouTube, we'll be sharing a copy of this recording along with a compilation of the great insights which Darren and Rajesh have shared with us today. In case you have any further questions for us, please do write to us at hello@getvimore.com or visit getvimore.com. Until then, we'll see you soon again in the next fireside chat with an insurance leader. Till then, take care, stay safe, and we'll see you soon.
Thank you.